Welcome to the dark side.
All right, guys, so now that we understand why we want to short, I'm going to go into the bad news of maybe why you don't want to short. And even if you take this course, like I said, and you never make any shorts, at least it'll give you a big understanding of when to lock in profits. Now, obviously, shorting is like a pro level skill, which means it's higher risk and higher stress. We're going to look into some of the reasons of why it's higher risk and higher stress in this part of the video. So the first thing we're talking about, why not short, is because there's infinite loss potential. That's not a good thing. Sounds pretty bad when I say that out loud. So let's just take a look at an example of how that works. Let's say you buy $10,000 worth of Bitcoin at $50,000, right? You can only lose $10,000, and you can only lose that $10,000 if Bitcoin goes from $50,000 down to zero, which is highly unlikely, right? To go to zero and it just disappears and you lose your $10,000, okay? But say you shorted $10,000 worth of Bitcoin at $50,000. You went short right here at 50K. You can make a decent size, say it drops 50%. That means for to make 50% gain, it'd have to go to 25K. Okay, and you make 25K, you make 50%. That means you're gonna make $5,000. So now you have $15,000 in your account. Okay, so you can make 50K, but it's pretty hard for it to drop 50%. Not saying it's impossible. We do see moves like that all the time. For you to lose that $10,000, it has to go to 100K, right? And if it goes to 100K, your entire $10,000 is gone. Going from 50K to 100K is a lot more probable than it going from 50K to 0K. Okay, so you can easily lose your $10,000 much easier than just by buying Bitcoin at 50K. If it goes to 200,000, guess what? You lost your initial $10,000, and now you're gonna owe your broker $10,000. You're gonna be negative $10,000 in your account. And your broker's gonna be like, yo, bro, it's 10 fucking grand. Where's our money at? The good thing is that the broker's gonna stop you out before that happens, and they're automatically gonna liquidate your account. You're gonna get liquidated. But there's different things that can happen here, especially not so much in crypto, but just an example of what I remember a long time ago. This is 2015. Somebody was short a biotech stock, and there's all these articles coming out. My short position got crushed, and now I owe E-Trade $106,000. And Joe Campbell claims on Wednesday he went to bed evening with $37,000 in his trading account at E-Trade, and then the next thing you know, he owed his broker and a debt of $106,000, meaning he lost all his $37,000. Now his broker saying, yo, bro, you owe us $106,000. Now in the stock market, it's way different because the stock market closes, at 4:30 p.m. and then everything's closed and there's nothing you can do about it other than there is pre-market and after-market trading. But in biotech stocks, of which happened in this case, news came out overnight, and it's not like crypto where it's open 24/7 where it would gradually run up 800%, of which the stock did. It would just close right here, and then all of a sudden next morning, news comes out overnight in the lull period when the stock market's closed. There's no trading. All the order books that were, say, down here at the lower price would disappear because people are like, okay, I'm not willing to pay it down there. And then people all of a sudden be willing to pay much more at a higher price, and it would gap open. So the broker wouldn't even have a chance to do anything to liquidate the account in that lull period when the stock market's actually closed, and the stock just opens at a much higher price, plus 800%. And now all of a sudden that guy is down on his position massively and owes his broker $106,000, whatever it was, right? So in shorting in stock market, it's much riskier than crypto. At least crypto, it's open 24/7. So our broker will be protecting us 24/7 so that we don't, owe our broker, from a $10,000 account, and then all of a sudden we owe them $100,000. So it can't happen in crypto unless there's an error with your broker, in which you might just be able to say, fuck you, you guys fucked up. It's easier to lose the entire position of capital if you short 10,000 than it is to by buying 10,000. So infinite loss potential on crypto, which is not necessarily a good thing. The next part is why not short, is that it's a much less clear trading plan, right? When we look at the Krypton course and we're doing Krypton breakout trading, when we buy into a breakout, right, we're looking for the much more clear, obvious, resistance zone. Breaks out. Okay, that broke out. We can clearly see where we can draw a line. Simple. Now that level that we just broke out of is now going to be some demand zone. And it's like, okay, if it doesn't hold above that, it's pretty clear that it's looking like a false breakout and maybe we should stop out. Or we put our stop somewhere below the previous lows of another demand zone or support, right? And then we just create a stop loss. Like, okay, easy, simple, done. Much more clear trading plan. But when it comes to shorting, and we're seeing these parabolic all-time high moves that are just going off this irrational behavior, just blowing through resistance levels, or there is an all-time high parabolic move, meaning that there's no previous resistance or supply zones for us to judge, okay, well, it's coming up on a supply zone. That's probably an area where it's going to peak out, right? If it's an all-time high parabolic, that means blue skies ahead, little clouds, blue skies out here, birds are chirping and flying, right? There's nothing up here stopping other than looking at the beautiful clouds and birds like, hey guys, we're flying by, flying high up here in the clouds with you, right? That's what is difficult, and I call it the off fuck zone. When you're short a position, you have no idea how much higher it's going to go. And that's why it's very scary, not necessarily recommended to be shorting all-time high parabolic moves. Then there's also the, basically if this was a revival pattern that broke out here, okay? These are the recovery parabolics where we see, potentially revival that comes up. And at least with these ones, we now have areas where we have supply that we can actually, gauge of like, okay, it might be here. The difficult part is when we're looking at these, we have a very clear revival pattern. It happened one time, okay? One breakout, one time, easy set up a trading plan. But when we're actually trying to call the top on a recovery after a kryptonite pattern, and it's say up, 100% here, and then say this is, 200% up here, then up here is, 300% gain. The problem is we have to guess which one it's going to be, or we have to manage the risk and potentially fail on this twice before we actually hit the actual trade, which makes it much more difficult to manage the risk because, okay, see if it was a revival pattern, broke out, 100% gainer, and we have this big, supply zone up here. We're like, okay, 100% gain into a supply zone. This could definitely be the top where we want to potentially make a trade, and then this thing potentially drops down. But what if that's not the top? What if the next supply zone is another 100% above this level from the previous breakout down here, and rather than it topping out here, it makes another send up here to the next level? And we're like, oh shit, now it's up 200% at another supply zone. This has got to be the top. Let's set up a game plan, trade it, get short. Okay, did we make money? Oh, fuck. It's still going. Stop out. Now, by the time we lost on this twice in a row, mentally, we're not going to be as sound as, if we picked it right the first time. And so now it's coming up on a third supply zone. A lot of times what happens in shorting is you enter early because you have FOMO. You're like, well, this has to be the top. And then by the time it's actually the top, you just fucked up a few times, or you might not even fucked up, but you made a sound trade and then stopped out. So you've already lost twice. And now the third one, you're like, my confidence is lower. I don't want to lose for a third time. And so you're now looking at this like, okay, well, maybe I just don't even want to bother with the trade because I'm fucking sick of this. Or you take the trade again and then you finally hit the fucking thing. But, you might make a 25% gain here on the third time, but you might have lost 10% here on this one because it failed, and then 10% here. So you might only walk away with 5% after losing on the first two trades. That's the difficult part of shorting. It's a much less clear trading plan. There's a lot more kind of not necessarily guessing, but uncertainty of when the top actually is on these positions. And so it makes it difficult, and it's fucking high stress. It sucks sometimes. As I said in the beginning, there's nothing feels better than when things are eating shit and you're absolutely crushing it, making money going short. I promise you, yes, it's much more stressful, but when you're making money going short and everybody's on Twitter like, why is it crashing? What's happening? And you have an understanding of why things crash and you're making money off it, it's like the best fucking feeling in the world. You become part of a next level elite club and you're like, oh, this is why people short. I feel fucking great. All these people are idiots who bought up here. I shorted and I'm making money. But again, it's the off fuck zone because once you're short, you're nervous. If you're short in a parabolic move at 10, fuck, is this the top? Oh shit, it's at 20, right? If you short a parabolic move on the first supply zone, but there's another two that are pretty high up above that level, and you get short, you're like, fuck, I'm short. It's probably the top. But what if it isn't? And what if this thing keeps dragging you up and keeps fucking with your head and keeps stopping you out? And mind you, this is not just going to be a clean run up and then run down. At these supply zones here where you're trying to get short, price action is going to be all over the place, swinging you all over the place and fucking with your head. All right, so that's why I call it the off fuck zone, because you're like, shit, this is scary. This is crazy. It can be very stressful, but also extremely rewarding when you actually make the money and call the short right. So why not short again? And just like I was saying before, it's a true test of your patience and discipline. It's extremely high stress and extremely high risk. Okay, so you need to be very, very careful when it comes to trading short and having a high understanding that there are these situations where it might not be the top. Okay, so when you're guessing the top, which is why it's so important that you have trading plans and have stop losses in place, because you might think the top's at $5. Guess what? The top isn't until $40. When it's at $5, it's already up 500%. and it seems ludicrous to think that it would ever go to $40. But it can, and it will. And if you don't manage your risk, you're going to get blown up just like this guy on E-Trade, and all of a sudden Otis broker a bunch of money. Again, crypto doesn't really operate that because it's open 24/7, but you could potentially lose your entire initial position when that happens. But anyways, guys, that's why you potentially don't want to short. But it's important that we understand both sides of the trade, and you'll also see once we get into live trades how rewarding it is, yet stressful to make money when things go down.